Hey everyone, welcome back to Finance Friday, another special edition of Money Girl where I answer your burning money questions. Today's topic comes from Marietta, who says, I have teenage children who work part-time jobs. Can I start a Roth IRA for them? Thanks for your question, Marietta. You're very wise to be thinking about helping your kids invest for their futures with Roth IRAs. This podcast will review legitimate ways minors can have a retirement account and take advantage of a Roth's terrific tax savings. Welcome back, everyone. Thanks for joining me. I'm Laura Adams, an award-winning author, finance spokesperson, money speaker, founder of the Money Stack newsletter, and host of Money Girl with 43 million downloads. My mission here is to help you get the knowledge and motivation to prioritize your finances, build wealth, and have more security and less stress. If you're getting value from the show, remember to send some love with a 5-star rating or a review on Apple Podcasts, Spotify, or wherever you listen. And if you have a money question you'd like me to cover, I'd love to hear it. You can leave it on our voicemail line at 302-364-0308. You can also send me an email using my contact page at lauradadams.com. And while you're there, be sure to sign up for the free Money Stack newsletter. Again, that's at lauradadams.com. All right, so let's talk about what is a Roth IRA. If you've been a Money Girl podcast listener or you've read any of my books, you probably already know that a Roth IRA is an individual retirement account, or IRA. It requires you to make non-deductible after-tax contributions, but its really nice tax benefits come later on in retirement when you can take tax-free withdrawals. So if you follow some simple rules, your kids could have some massive investment growth in a Roth IRA and skip paying taxes on all of it. Those tax savings could be huge, depending on the account earnings. Another Roth IRA benefit is that you can withdraw your original after-tax contributions at any time, penalty-free, because they were previously taxed. That allows you or your kids to tap a Roth IRA early for future expenses, maybe they want to go to college or buy a car. Of course, I recommend staying out of your or your child's retirement account so it grows undisturbed and can build as much wealth as possible. But I think it's really nice to have the option for penalty-free withdrawals, and that fact may make it easier to contribute funds to an IRA versus, just putting it in the bank. However, taking earnings from a Roth IRA before reaching age 59 and a half means those earnings would be subject to income tax and an additional 10% penalty. Remember, the earnings have not yet been taxed. So taking them out early before age 59 and a half means the penalty and taxes. But if you've owned a Roth IRA for at least 5 years and you're over 59 and a half, all withdrawals are tax-free, which is fantastic. Another Roth benefit is that, unlike traditional retirement accounts, a Roth has no required minimum distributions at any age. Therefore, you, not the IRS, has control over when and how much you want to take from your retirement account. You can take tax-free money from a Roth as needed or just let it grow tax-free indefinitely for you or your heirs. For 2024, the maximum IRA contribution is the account owner's earned income up to $7,000 or up to $8,000 if you're over age 50. For example, let's say a minor child earns $10,000 during the year. Well, they or their parent can contribute up to $7,000 to an IRA. However, if a child only has $2,000 in earned income for the year, they could only contribute $2,000 to a Roth IRA. And you can make IRA contributions up to the child's tax filing deadline for the prior year. And there's no minimum income or age for kids to qualify for an IRA. However, they must have legitimately earned income from employment or self-employment. And I'll talk more about that in a moment. So, what income qualifies for a Roth IRA? Well, for any type of IRA, qualifying income must come from working, such as from wages, salaries, commissions, and tips reported in Box 1 of Form W-2 called the Wage and Tax Statement. So, let me go through some examples of income that does not qualify, kids or adults, for IRA contributions. Gifts, investment income, real estate income, pension income, annuity income, deferred compensation, Social Security benefits, unemployment compensation, child support, or alimony. Since an IRA requires earned income, it's not likely that very young children could qualify for one, unless they're a child star, they're on commercials, that kind of thing. But it's common for preteens and teenagers with W-2 after school or summer jobs to contribute to or even max out a Roth IRA. Kids also qualify for an IRA if they have net earnings from their own business, like babysitting, tutoring, or dog walking. But you can't pay a child a large cash allowance for household chores and call it income for IRA purposes without documenting and claiming it as real business income. So let's say a child works in a family business. You should treat them as an employee by deducting income taxes from their pay and issuing a W-2 to ensure they can have a Roth IRA. If a child does legitimate, age-appropriate work for a reasonable wage, that qualifies them for an IRA. Even if a minor earns less than the standard deduction and doesn't owe any income taxes, it's wise for a parent to submit a tax return on the child's behalf. That ensures you document their earnings with the IRS so they can't question the legitimacy of any Roth IRA contributions. Plus, a child may qualify for a tax refund of withheld earnings, and you have to file a tax return to trigger a refund payment from the government in the following year. Minors with self-employment income must file a tax return when their net earnings exceed $400. If you're unsure whether your child should file a tax return or you have questions about paying them in a family business or setting them up with a Roth IRA, definitely get advice from a certified tax professional. So how can parents help kids contribute to a Roth IRA? Well, opening a Roth IRA for a minor at most banks, brokerages, and investment firms is really easy. You can do it all online, and the account will be in your child's name, but you have to manage it until your child turns 18 or 21, depending on your home state. It doesn't matter where a child's IRA contributions come from, such as a parent's bank account, as long as the child is eligible for those contributions. So a parent could let their kids keep all their earned money and make IRA contributions on the child's behalf. You might even create an incentive where you match the amount a child contributes to their IRA, assuming you stay within the current $7,000 annual limit. And the source of the funds could come from parents, grandparents, or other family members. Starting an IRA early in life means your child has lots of time for it to grow into a significant nest egg, even with modest contributions. Imagine you help your child contribute $500 to a Roth IRA every year from age 10 to 20. Even if they never contributed to the account again, it would grow to about $250,000 by their 65th birthday with an 8% average return. But let's say your child contributed $1,000 a year starting at age 20. They would have more than $600,000 in the account. And if they contributed $5,000 a year starting at age 20, the account value would mushroom to over $2 million by the time they're in their mid-60s. With some foresight, you can put your kids on very successful paths and even raise millionaires by showing them how small, regular investments are the secret to creating wealth and financial independence. Marietta, thanks so much for your question. I hope that's been helpful. Before we go, I want to remind you to subscribe to The Money Stack. It's my weekly newsletter filled with money tips, tools, advice, challenges, and things I enjoy. Plus, you'll get invitations to live educational events. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and I want to thank our fantastic team. Steve Rickyberg audio engineers the show. Our director of podcasts is Brennan Gachus. Our digital operations specialist is Holly Hutchins. Our advertising operations specialist is Morgan Christensen. And our marketing and publicity associate is Davina Tomlin.